completely turns your bias on its head. So we're going to talk about that. We're going to talk about the effect on currencies and gold. Meeting controls. Okay. Cool. Bryce, can you do me one last favor, bro? Can you send out the YouTube link in the public chat?
Yes, sir.
Live.
Yep, I got you, bro.
And a lot of people caught off guard right now, like, oh my, what? They're live. I wish these people would let us know which days they're gonna be live. I'm working on it, people. All right. It's a personality trait. Okay, looks like we're live on YouTube officially. Good to go. All right, welcome, ladies and gentlemen, to another Sunday Market Outlook hosted by your boy, Roy Dunya. I'm the co-founder of ChartAddicts, full-time day trader, and arguably one of the most well-spoken people on YouTube. So you found yourself in a very fortunate environment where you guys get to learn and hopefully take some of the same trades that we take and share in our success. Let's go through the Forex Factory, show you some of the geopolitical events that are happening, big data releases that might impact price. And of course, we have to talk about the impending World War III that just got announced today with Israel declaring war on Hamas. So we'll talk about that, how it affects currencies and how it affects the rest of the FX market. Let's jump right into it. So first things first is I want to look at the data releases for the week, and just to make sure there are no speed bumps that could potentially negate the bias of my trade, or something that could potentially add fuel to my trade and go in the direction I need. Okay, let's get right into it. So what I'm looking at here is Wednesday, we have core PPI. This is the Producers Price Index. It's an inflation measure for producers. So again, I say this every time, but if producers are paying more to make stuff, consumers will eventually pay more. So the PPI number is an early indicator for CPI. Now we have the FOMC meeting minutes from last month's meeting. Is going to add some context to the decisions that were made. The reason that I look at the FOMC meeting minutes is to see how much disagreement there is amongst the Fed presidents or amongst the Fed chair people, because the Federal Open Market Committee, like Jerome Powell makes the final decision, but they're not always on the same page. The heads of the top 12 banks in America, the Federal Reserve banks, I'm not talking about JP Morgan, the commercial guys, the ones that are part of the Federal Reserve System, they all get, how do I say this? They all have their own data. So the St. Louis Fed, the New York Fed, they're all handling different jurisdictions, and all the biggest branches and the commercial bank branches in those areas are giving them data. And so they're making decisions. They have an opinion based on different pieces of info. When they all get together for the FOMC meetings, they share in this information. They come up with a plan of action that's best for everybody. And even though there's two people that might disagree, Jerome Powell gets the final say. The reason I read the minutes is because the more people that disagree, eventually the opinion starts to go their favor. So if you have two people that disagree with Powell, no problem. As soon as it gets to three, now Jerome Powell's opinion might change. And that's where you can expect massive shifts in Fed policy. That's why FOMC meeting minutes are important. Now, if you're trading pound, you have monthly GDP dropping on Thursday. What else we have? We have core CPI and CPI dropping on Thursday. So let's take a look at the CPI print. This is remarkable. Somebody, please tell me, what is the Federal Reserve's target for inflation? AMG, welcome. Cliff Co on YouTube, what's going on? Make sure you guys drop that like. You guys know me. I'm going to be saying the same thing. Make sure to hit that like and subscribe if you guys are on YouTube. Great to see you guys. But somebody tell me, what is the Fed's target for inflation? I'm looking to you, ChartAddicts members. Okay, everyone says 2%. Good stuff. So the high that we reached last year was 9% inflation. Since then, the Federal Reserve has been doing everything they can to slow down the economy so that we can get things back under control. And we're back at 3.6%, or right now it's at 3.7. They're expecting the annual number to drop to about 3.6%. This is headed in the right direction. Now, if you guys can see, we actually hit a 3% number in July. And then we hit another 3.2%, and then now we're around the 3.7. This is a really good sign. Just as a reminder, there's two ways this game can go. The soft landing crowd believes that we can effectively bring down inflation without crashing the economy, which is kind of what we're doing right now. And this is headed towards that soft landing crowd. The doomsdayers, myself included, believe that at some point we're going to have to hit a recession, because Jerome Powell said it himself. He said the only way to meaningfully bring down inflation and keep it down is to make sure that people lose their jobs, because as long as people have jobs, they keep spending and prices will have to stay up. So this is getting closer and closer to the fact, or getting us closer to the, I don't want to say the fact, what is the word for it? We're getting closer to that scenario being the one that plays out. No recession and soft landing. Okay, every good print is coming out better and better. And then we have preliminary consumer sentiment. We'll keep an eye on that. Overall, the data releases are important, but I don't think anything is as important as the escalation of the geopolitical conflict that's happening between Palestine and Israel and Hamas. Okay, let's go look. We said big respect and shout out from Melbourne, Australia, Roy. George Abi Yunus. Abi Yunus, are you Lebanese? I got some family members out there in Australia. I got some Lebanese people out there. Okay, geopolitical conflict. Let's talk about what's happening right now, and then we'll talk about how that's going to impact markets. So let's go Israel-Hamas conflict. So earlier yesterday, there was an attack on Israel during one of the holidays. So typically attacks on Israel happen during some of the most sacred days or months or weeks to create the most amount of impact and the most amount of fear, etc. This was a unique attack. Though, in case you guys don't know, I was born and raised in Lebanon, which is right next door to Israel. We were invaded by Israel in 2007, 2008. I grew up around a lot of this conflict, bombs, shooting. It's a part of living in that region. All right, Bobby, let's get the microphone muted, brother. It's part of living in that region. So when people see this from overseas, they're like, okay, Palestine and Israel are beefing. Doesn't sound like anything new. What exactly is different? Israel has one of the best defense systems in the world. They have an incredible military, which is the IDF, and then they have one of the best intelligence agencies in the world with Mossad. They also have a great defense system where whenever they get bombed, they have this wall, the Iron Dome, that protects them from outside attack. What happened yesterday was it was a land and air attack that was coordinated very effectively, that went through all their defenses, that was very meticulously planned. And I think that this is going to lead to a much bigger problem, y'all. So let's take a look at the latest headlines here. Not a big CNN fan, but they're all posting similar headlines. Iran's connection to the Israel attack. So this is kind of becoming a play. In case you don't understand how this conflict happens, is when two people are beefing. Let's take Russia and Ukraine, for example. They are puppets for a much bigger plan. So Russia is kind of the gateway to the East, right, to China. And so they're being backed by a lot of their allies, and a lot of the countries that are buying Russian oil are further helping them in their war. Then you look at Ukraine on the other side, and you have NATO just backing it. So it's a proxy war. Proxy meaning someone else is fighting for you. They're like the puppet for you. I believe that this attack is very similar, is that Hamas was not acting on their own accord. Obviously, we're going to have to see how the news comes out. And then Israel will not be acting on their own accord as well. Israel has very strong partners in Europe and the United States, and Hamas has very strong partners in Iran and the Middle East. The reason that this is going to have such a big impact on markets is because this goes beyond just the local geopolitical conflict. Now this is going to become the BRICS economic sort of conglomerate versus the rest of the world, the G7 nations. So you have the economic fight that's going to spill over into, you have a political fight that's going to split over into the economic side. So if you're beefing with China politically, but you're still doing business with them like America is, things can continue to run smoothly. Now, as soon as we have to pick a side, We can't even do economic business with these adversaries. So now we're going to feel that thing on a much bigger scale. Higher prices, we can't get certain goods, shortages at the grocery stores, et cetera, et cetera. Now, I'm not saying we're going to get there because we still haven't seen the response from our State Department and how America plans to respond to this. America is the referee. Okay? If we had strong leadership, or what's that guy's name? Who's the Secretary of State? Guys, who's the Secretary? Is it Anthony Blinken? So if Anthony Blinken can get his shit together, go over there and broker a peace deal, this will de-escalate and we'll be able to get through this. Let's talk about stock markets. Put a 1 in the chat if you think that this is bearish for stocks. If going into this uncertain conflict is bearish for stocks, put a 2 if it's bullish. Let's do a quick poll here before I give you guys the answer. Also, if you're watching this on YouTube, please drop a like. Would appreciate you tremendously for your support if you were to do so. George says, yes, I am. Sure, Roy. All right, George, Charafna. Watch market, ignore all that nonsense and rally to new record high by the end of the year. Well, El Signon, don't tell me what to do. I'll drag you to the front right now. All right, it is a Sunday, brother. It's the Lord's day. So let me not get out of character. All right, everybody, for once, Mo, I know I always tell you not to answer because I want to hear everybody else's answer. I actually want to see your answer, Mo. I want to see your answer because I want to see what you think here. This is where we are pushing the bounds of what you know and getting to the point where we're confronted with something that's completely novel that you and I don't know the outcome to, but me and you can work through it using the quantitative data to figure out how this can have an impact. But I want to hear your guess and I'll break down how I came to my conclusion. And clearly, y'all, I don't fucking know. Because if I did, then I would, I'd go sell my kidney and put all that money leverage into options, swaps, futures, and Forex. I don't know what's going to happen, but I have a pretty good idea how this is going to turn out. A lot of people are saying 1. We got Derek Torres says 2. We got Vipe Gaming says 2. We got El Signon says 2. Okay. El Signon, you just redeemed yourself. Murad says bullish for gold. Clearly. All right. Clearly bullish for gold. Unbelievable. That means the dollar must have taken a dump. It did not. Wow. Would you look at that? Oh, we're good. We're just early to the party. Oh, quick dollar retracement. So let's just jump right into the technicals and let me give you guys my answer. Personally, I think it's going to be bullish for the stock market. I believe that most traders are now positioned short. Now, on the higher time frame, this thing could break through these lows. This is how I look at the technical analysis. We have this structural level of resistance, support, drag this all the way through the body of the candles, support. Oh, that looks weird. Okay, support again. We have this liquidity grab through the zone, and then we have the retest for support right here. Clearly, this is our daily support. And then we have support turn resistance, 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 resistance. So clearly we have this range here. I'm drawing this stuff like I don't have all my tools right here. Ridiculous. So here's my discount. Here's my premium. Here's my support. Here's my resistance. Okay, based off of this range, are we closer to the low or to the high? By the way, I went to this car show yesterday hosted by the owners of Lamborghini in Miami. Shout out to them. If you guys know, or if you guys went to the summit last year, you may have recognized that Lamborghini of Miami was one of the guests. They had a few cars out front. So the same car they had a few years ago out front of the convention center, the black SVJ or whatever it was at the car show. And so I noticed, I was like, wait, that's the owner's car. Ran into the owner of Lamborghini Miami. Insane. I'm telling you guys a story for a reason. Think bigger. Whatever problems you're dealing with, and you think that saving 3 cents here and saving $4 on coffee here and all this other bullshit is going to get you out of your problems, it will not. I saw a $10 million car yesterday. All right, a $10 million car. I thought my problems at the FX Summit were big. Not even close. All right, got these answers loaded up. Everyone says low. So clearly, if we're inside of a range, if this is the low of the range, if this is the high of the range, and this is the middle, we're pretty close to the lows. So what I'm seeing is that we have multiple rejections of the zone. Even though the market broke below, we still have a meaningful closure back inside of that range. So the first closure is this one. Okay, so we had a break above the previous high. We had a shift in momentum back inside the range, a retest back under for a double bottom, and then again, the recovery. And this is my favorite confirmation out of this entire sequence is, okay, maybe this thing was just playing around and consolidating so it can drop. Sellers tried to break through and buyers swiped all the way back up. I love seeing those wicks because it shows that sellers at least tried to push the market lower. We don't have to worry about surprise sellers showing up. So now what I'm looking for is a retest of this buy level to take the market back up the range. A lot of people think that this geopolitical conflict is going to be bearish for stocks. Let me explain to you why it's not. When the world goes to shit, where do you want to put your money? In the country that has the safest, the most reliable banking system, the one with the most interest, the bank with the most stable liquidity market liquidity in their capital markets. So like the lending markets, the debt markets in America are the best in the world. Even though there's a high percentage of debt that's being taken out, there's still a lot of trust there. Which government are you going to trust? If you have to park your money somewhere in World War III, you want to go put it in Japan with negative interest rates? Hell no. You want to go put it in Europe where these socialist policies are destroying every major city and mass immigration is slowly running down the largest economies, where even England, where the UK had to secede from the European Union just to save themselves from economic collapse. You're not going to put your money in Europe. You're not going to put your money, because obviously there's a war, impending war with Russia as well. You can't put your money in Africa. You can't put your money in the Middle East. You don't want to put your money in China because you can't trust if the money will still be there. So where do you put your money when shit hits the fan? Everyone says gold, but gold is not the same asset that it used to be, people. Central banks hold gold. People in their portfolios, they hold fixed income. They hold government bonds. They hold assets that actually return, right? Gold is just like, I don't want to lose my money, so I'm going to put it in this rock. These other investments, they tend to see a massive rise. So can we see a scenario where gold is bullish and the dollar is bullish and NASDAQ is bullish? I think so. It's one of those trifecta scenarios that nobody expects. Why? Because if I'm an investor, okay, put yourself in the shoes of Warren Buffett, not even Warren, Ray Dalio. Put yourself in the shoes of Ray Dalio. Now, obviously, he has a well-constructed portfolio, but you want to put your money somewhere it's safe, and there's a World War III knocking at the window. Every country you'd want to put your money in is kind of on the border of another country that kind of has some war. And America's government, as shitty as it is right now, and as shitty of a leadership that we have, it's still the best in the world. Our legal system still works. Our judicial, our voting process, democracy is still intact. People will put their money here 100% of the time. Okay, so that's a scenario where people will put their money in the USD, dollar goes up. People put their money in gold because it's a safe haven, and people put their money in NASDAQ because you got to take your money off of the least, like you want to take your money away from all of these foreign investments that you're doing and just put them here at home. All right, I'll invest in China's stock market and everything until they want to take over Taiwan. Now I'm like, get my money the fuck away from there. Get it as far away from there as possible and put it back in my hands. Let's go into technicals. Let me know if there's any pairs that you guys would like me to cover, and we will cover those. AMGG says dollar is king. You're right. Also, Christ is king. But the dollar is the top of the game. It's the Don Dada. It's the one that, and if you guys really want to understand dollar dynamics, which as a Forex trader, you should, don't have your head in the sand. Don't ignore macroeconomics. Watch my podcast with Brent Johnson on our channel. Brent Johnson. He invented a theory he discovered a theory called the dollar milkshake theory, which explains why the dollar is going to win in the end. Because everybody has a thing like currencies are all doomed. All currencies in the next 10 to 15 years are doomed, and we're going to have a second Bretton Woods. If you guys are asleep to that fact, you're not planning on being utterly successful. Just if you hope to have millions and millions and millions of dollars, you should hope to understand that money will not be existing in the same form in the future. But that's a side conversation. Out of all the currencies that collapse, which one will collapse first? Which one will collapse last? I don't know who will collapse first, Japan, but I do know who will collapse last. Okay, that's a bet that I'm willing to put my life on. The dollar will be the last survivor. And so the question is, will the dollar print so much that it's going to become worthless and we go in, we just freeze to death, we sink to the bottom? Or is it the exact opposite? The rest of the world prints more than we do, and the value of our currency just completely balloons compared to everyone else, and we catch on fire as opposed to freezing to death. So those are the two scenarios. You should understand how both of those are going to play out. This conflict brings us closer to, which currencies are going to be the winners and losers. And so I keep an eye on that for sure. Let's talk about NASDAQ, and then we'll head on to the next phase of the call, where we'll go deeper into the conflict, and I'll break down piece by piece how this could be affecting the rest of the currencies. I ain't gonna lie, Turkey been super bullish. Watch their stock market for now. What's your thoughts on GU? Can you see it drop back? We'll cover that as well. So NASDAQ, we have a very clear range. We have the bottom and top of the range. And because we're at the very top of the range here, so what we were covering before was the daily range that we were looking at. So I showed you guys the bottom, the low, the high. So when we go and zoom into the 4 hour, I want you to keep in mind that I look at everything in terms of ranges, and everything is either in a micro or a macro range. The people that just graduated the NASDAQ bootcamp, you should know this like the back of your hand now. The ACP folks, you should know this like the back of your hand now. Every time that there's a consolidation range, you can look at the highs and lows to make decisions. If you're trading along with the direction of the trend, then you can buy at the low of the range. If you're trading against the direction of this trend, which is selling, then you would sell at the top of the range. So we look down here and we have another box. And so because of this box, we know that we're going to be looking to buy the lows and to sell the highs, and it's really that simple. So we've had a clear breakout of the range, and we have a clear break above the previous highs, which shows us that the market is now bullish. And so tell me, what is the last thing that I'm looking for in order to buy this? We've already established that the market's in a range. We've already established that we wanted to buy low. And we already established that the market has broken the previous high and shown us that buyers are now in control. And so what is the last confirmation that I need in order to confirm the bullish bias and to enter the market? Max says high or low. Mo says retest of the previous 88.6. I wish. Look, this trade, the 88.6 down here, 14,600. My God, this would be the best case scenario. But I have a strong feeling that the market is not going to be that generous, and that it'll do a 61 retest instead. What it'll do is probably this, and then maybe it'll get stuck here and come down to the 88.6, as it always does. So it'll go up and then have the false retest. The false retest will reject and push. It'll make a lower high and then come down to the prime entry. This is exactly what we covered last week. This is exactly what happened. Matter of fact, Mo, I like you, bro. I like you, fam. That's rock solid. I could see this thing coming down and rejecting. And then tomorrow, right, just trapping bears. Everyone's like World War III, World War III. You turn on Yahoo Finance, you turn on CNBC, you turn on Bloomberg, and all you see is the end of the world and the propaganda. So I think a lot of people will become net sellers. And whenever there's this many net sellers in the market, market makers are going to use that as an opportunity to put in their buy orders, because there's finally somebody on the other side of their trades. Now, if this thing actually escalates to a real conflict, like to a real war, and people have to start choosing sides, it's not going to be the scenario at all. We have bigger problems to worry about, and we might see a sell-off in the immediate term. Let's go do currencies, and we'll keep the show on the road. So there's two things that can happen with the dollar, and this is actually a bit uncertain for me. Personally, I'm still looking at the 107.7. Once the magnet is up, price is going to hit. The first magnet was here, second magnet was here, the third magnet is 107.7. There's two ways the market makes it up there. Direct flight, and then maybe we have a retracement, or we could actually have a sell-off back to these levels. And like, look, we've already broken above these two previous highs. Buyers are clearly in control. All we're looking for is a higher low, the same that we were looking at on NASDAQ. Once you break out of a previous high, you're looking for a higher floor to indicate a continuation of that momentum or that trend. So now that we've cleared the previous high, we can either move back down to 103.7 and then continue, or this thing will create a floor and continue to push up, which I believe is the possibility. Why do I look at the dollar? If this thing forms a floor and goes up, if you guys are trading GU or EU, it's going to sell off. It's just going to sell off. That's it. No retest, sell off. Maybe a retest on the 4 hour. Other than that, no major leg to clear liquidity. If this thing goes for an extended retracement, then GU and EU will do the same. They're going to go up for a while, probably the next week, before they then drop. And so there is a waiting game every single week. We know exactly what we're looking for. We know the playbook. And now the question is, will the dollar respect and form this floor? Or is this thing going to last about, 2-3 candles and it's just going to start violating? A respect of the floor would mean, okay, this thing's going to start to push bullish. And then when it eventually comes back for a retracement, it holds again. If this thing will not break this low, if it holds 106 flat, then it's going to continue to the upside and GU and EU will be immediate shorts. So a lot of people are keen to trade on Sundays, and sometimes I do the same. I'll trade on a Sunday if I think that this is the low or the high of the week. But other than that, let the market form structure. Why are you in a rush? It's like the Penguins when they're all at the front of the line, right? Everybody's jumping, they're all falling off the cliff and shit. And like all you got to do is just wait for like the first 100 Penguins to fall off to realize, whoa, there's a cliff right there. And it's the same with Sunday trading. Allow the market to form structure, allow it to kick out a lot of the people chasing and some of the early traders. And then Sunday night into the overlap, if there's something you see a retest, go for it. If not, just let it go. All right. So I'm bullish on stocks. I am bullish on the dollar, but we're just going to have to see about that one. I feel like if I was a global investor, there's only one place I'd want to park my money, and that's the US dollar. So I'm bullish on the dollar as well, but that one less sure about the NASDAQ. Bitcoin. What are we doing here? Oh, Bitcoin had a nice little recovery here. Double bottom. This thing ain't gonna last. I don't even know why I'm looking at this. Let's go U30. A matter of fact, we'll do a higher time frame analysis on U30. Yeah, this thing looks like it's about to crash. Bro, what? How did I miss this? Oh yeah, it's because I'm bullish. It's because the larger time frame trend. Oh my God. Yeah, I'd be lying if I said that this was this is looking a little concerning. Huh. Wow. So we're at the neutrality zone midway inside of this overall range. Everything's in a range. Write this down. Sun Tzu, Roy Dunya says everything's in a range. So whenever things are in a range, we're going to measure body to wick, figure out where we're at, and oh no, the kiss of death. Bearish impulse, 88.6 retracement. We're clearing the 61. Hold on though. The 61 is always my first target. We have a clear rejection here on the weekly where the weekly candle closed above that zone. And so this week's candle has to close above. You guys can write this down for your notes for the week. If price closes above 33,384, then price is bullish. And if the market closes below, then it's bearish. To support that, we also have this higher time frame area of support. So we got this inverted head and shoulders formed right here. Market pushed up and then came back for the retest. We have floor, floor, ceiling, floor, floor. 61. As long as price stays above that 33,380, we're pushing up to the upside. Okay, so now that we've established our higher time frame levels, let's scale in and see what opportunities we have right here. So again, everything is in a box, correct? The current box that we're playing in is this one. Here's the low, here's the high, We're getting pretty close to the low. So I'm going to measure my Fibonacci from the very low to the high. Looks like the 88.6 is right here. I'm looking for longs. I'm looking for longs until the market proves me wrong. 10 to 20 points below the previous low, which is, that's 550. We'll put this at should be at 500, but really it should be a little bit lower. It should put you about 70 points. Oh, that's not too bad. About 70 points. So what's most likely to happen is actually a breach and a double bottom of this area. So you can actually get entries even below the 88.6 for a much better risk and reward. So the risk and reward for this trade is about 2.8 to 1. If you enter below the zone and try to catch at the bottom of these wicks, you get a much better R&R, a 20% more profits just by doing that. Rough estimate. Okay. Anybody curious about why we're buying this? All right, clearly we're at daily support. We already had a liquidity grab through the zone. Yes, we have a bullish break above the highs. Higher time frame 61 fib. We already hit the 88.6 and rejected. And so literally all you got to see now to get the most perfect trade of all time in all history is a double bottom rejection. So I'm going to scale down to the 4 hour here and do the same thing. We got a box here, don't we? Here's our box. You're going to sell the top of the box. You're going to buy the bottom of the box. It's just that simple. It's a fractal, people. It's a fractal. So here's the previous consolidation. Safe to say we had a fake to the downside, fake to the upside. And so we might actually have this move. If you guys know the box strategy that I teach, this is actually most likely to be the move. And this is actually where I'd be looking for a double bottom rejection here. So you'd actually want to see a breach of the lows just based off of this pattern. And then below these lows is where you're going to get the best entries. Either way, if your stop loss is set, you'll be fine. If it's set on the higher time frames, like we just discussed, you'll be fine. 88.6. And so this would be the trade that I'm personally looking for tonight. And unlike most of the trades, it's not going to be 3 to 1. It's going to be a 2 to 1. Because if the market does want to violate the lows and create some kind of double bottom at the extension, I want to make sure I'm still in the trade. So your two options are to enter at 33 flat. What is that? 33 flat, pretty close to it. Or wait for this liquidity grab through and enter down here. Okay, Roy, which one are you going to do? Both. I'm going to split my orders. I'm going to enter a small position here, larger position here, and the largest position at the extension. As soon as price breaks above the 886, I'll close that position and break even, close this one in profits and walk away with my money, and hold this one and break even. Okay, little side note for you guys. What is this, US 30? Yes, Tommy Sotomayor's mama. What? How do you even come up with that, man? Break and retest, textbook, pull back to the 61, break of structure, high, yes, sir. Okay, any questions, comments, concerns, ladies and gentlemen? Any questions, comments, concerns? This about wraps up our stream. It's great to have all of you guys on here. Ladies and gents, if you're watching this on YouTube, do me a quick favor and drop a like and subscribe for more amazing content. I will be streaming every single day for the rest of the year. You heard that right? 85 days left in the year, I think. I think it's 85. However many days left there are in the year, I will be streaming for you guys. 84 days left. What I'll be doing every single morning on YouTube at 10, or let's call it 9:30 a.m. New York market open, is we'll be watching the market open, live trading if there are any opportunities, and I'll be covering the top Forex news events of the day. If you're looking to get information on finance news, economic news, geopolitics, just like the biggest topics that are happening on Twitter, that are trending on Google, that are trending on the news sources, I will cover those at length, and explain how they affect markets while I live trade and show you my strategy in person. So if that's something that interests you, if you feel like that will be valuable for your trading, go ahead and drop a like and subscribe so you get notified when we go and stream. All right. I'm extremely unreliable in terms of some days it'll be 9:30, some days it might be 10 o'clock. And so I highly recommend that you all put on your notifications so you get alerted when it's time for us to go live. Deal? All right, everybody. Great stream tonight. Make sure you watch this back and take notes. Wait, Robbie says, do answer my question. Let's be honest. Does price action work? Good morning in Australia. Is it literally possible to make wealth from trading? Robbie, I'm going to be honest, brother. That's a bit of a stupid question. Honestly, is genuinely possible to make wealth from trading, and can we live off of it? If you're asking yourself that question, chances are no, not for you. Trading requires a very high level of self-belief. Like you gotta believe in yourself that you are going to be the exception to the rule, that you're going to be part of the minority that's willing to do whatever it takes to be successful. And that's not a question of, is it possible to be successful? The successful traders, they're asking themselves, who's going to stop me? Like, there are successful traders out here, obviously, myself included, and I'm telling you what to do. And so if their information is out there for you to become a successful trader, that means the rest of it is a choice. Are you going to sacrifice everything and commit to being the best trader you can be? If the answer is no, then obviously not. You can't hope to make money trading. Now, if you're telling yourself, yes, 7% of traders are successful, why do 96% or 97% or 90 whatever percent of traders lose? Well, it's because of these top 5 things, right? Over leveraging, over trading, not having a plan and gambling, just operating emotionally out of fear and greed, and really just not having the technical knowledge to make smart decisions. So if you're like, okay, well, there's a million reasons why traders win, but there's only 5 reasons why traders lose. If I avoid those 5 things, can I be part of the winners? And then you do that and you become a winner. Now, why don't people do that? Nobody does that shit long enough to actually see the results. You guys understand? And so you know what it takes to be successful. If you don't, our channel is full of free content from some of the most successful traders around, where I ask them all the questions. I ask them everything that is important, how to make money, some of the things they feel about stop losses and how they feel about risk. And they gave us the answers. And so if you really don't know what it takes to be successful, hop on our channel. The information is there for free. And then just do that shit. Do you think the US 10-year bond is going above 5%? I think that there's going to have to be some intervention in the bond market, Clifco. There's no way that we're going to have this much of an inversion and this much uncertainty in the bond market. The only reason that America is so stable is because our bond market is stable. It's predictable. As soon as we take away the predictability of the long-term lending market, we've completely fucked the country. So there's 2 kind of battles we have to deal with. Number 1 is the inflation battle, which happens from printing too much money. The other one is the bond crisis. What happened in the fucking pandemic is what quantitative easing really is. The Treasury creates a bunch of bonds out of thin air. The Fed prints a bunch of currency out of thin air, and then they just swap with each other. You understand? It's like they're going to end up creating a bunch of bonds out of thin air, and then the Fed is going to finance it, and they're going to create debt in order to finance those bonds just to stabilize the value, stabilize the prices, so that the yield stops moving so rapidly. So stabilizing the bond market means the Fed fuck, dude, this is not good. The Fed is going to have to artificially backstop the bond market, which makes us basically the same as Japan. If you guys see these massive fluctuations like what happened with the Japanese yen last week, 300 pips in a minute, the reason that happened is because they had to do an emergency currency operation to either print a lot of their money and buy a bunch of their bonds in order to compensate for the fact that their bond market is getting hurt. So I hope America doesn't meet the same fate. Long story short, America will always stabilize, but at the expense of the rest of the world. So turbulent waters to come. And also the Fed's been trying to avoid fucking the rest of the world because the other presidents of the central banks told them, they're like, look, every time you print, it crushes everybody else. So be very careful about the decisions you're making and how they impact the world. And that's why the BRICS currency is a thing. And that's why these alliances are forming, because everyone's basically tired of playing the game with the US. Do I trade SICT concepts? No. The only thing I saw is an interview of a hedge fund manager, and he said retail gambles as institutions don't use charts, and charts can't make you rich. That guy's probably a dickhead. All right, just because someone's on YouTube doesn't make them any more credible. Just because they worked at a hedge fund like any of you could open a hedge fund. I hope you understand this. You could open a hedge fund easier than you can get a Series 7 license. Okay, and I had a Series 7 license, and I had a Series 66 license. Just because you're a hedge fund manager doesn't mean you're smarter than the next guy. Look at the average returns of the hedge funds in America. Most of them are fucking losers. Most of you will make more money than some of these hedge funds. And so, yeah, they all learn traditional strategies. They all think that they're smarter than everybody else because they use quantitative strategies, which essentially take gambling out of trading. You can do the same. You can build a strategy that's so foolproof that it works over and over again. And Robbie, with all due respect, brother, if you haven't gone and done the research and the back testing, then you're going to fall for whatever bullshit people are feeding you. Someone tells you trading doesn't work. It's like, dude, you're going to believe whatever people tell you. Like, if somebody told me the sky was green, I don't give a fuck what they said. I'm going to go look up and I'm going to verify for myself. If somebody tells you that you can't make money trading, open a fucking demo account, man. And use a strategy. Go and learn a strategy, open a demo account and try it. And if you're making money, and then everybody on the internet is telling you you can't use a technical strategy to make money, and you're doing it, who's wrong? Who's lying? Is it you or them? Because reality always wins. Truth always wins. If you're making money, obviously it fucking works. You guys get me? And if you don't have that in you and the curiosity to go out there and not to be a follower, but to be a student, to go and trust, but verify as well. If you don't have that in you, brother, you need to build that. You need to become very skeptical. And I know that I'm using Robbie as an example here, and I appreciate you speaking up, Robbie, but this goes for everybody. You're going to watch a ton of content, 15-second clips, this trader saying this, and some guy in a Lamborghini saying this. If you are dense enough to think that a 15-second clip or 30-second clip, and hundreds of those watched over and over again, are going to give you a rational thought process and a rational frame of mind to make decisions, you are out of your fucking mind. Because when you go to make a decision, you're going to have these flashes of all of these different, 30-second clips that played in your head. Hold the trade. No, if you want to let your winners ride, if you want to have true success, only trade small accounts to build your credibility or to build your confidence. No, only trade big capital to make real money. And every reel is telling you something different. You're going to be the most confused trader in the world. Would you agree? So what I want for all of you is to go and find a technical strategy, and then to go and test that strategy by backtesting it on TradingView. You can use the replay feature on TradingView here. Where's it at? Replay feature to hide a bunch of candles. And if the strategy is like, let's say it's a Fibonacci trend trading strategy. Okay. And I'm looking for, specific entries and exits here. And I'm using my fibs, and someone said, Roy, you should buy it at the 88.6. I'm going to verify. I'm like, okay, well, here's an impulse that broke above the high. Can I buy it at the 88.6? Let me try that out. Let me see if that even works. So I'll take out a long position tool, and then I'll just draw this. I'll put my stops below the lows. Okay, and I'll take this. Okay, so if I bought it, at the 88.6 with my stop loss below the extension level, and I did the strategy, does it work? Well, let's play this out for a few candles. Okay, well, that one didn't work. Or did it? Okay, it did work out, but it hit the stop loss first. I put that in my notes. So how much was my stop loss? 116. Oof, 116 is kind of heavy, right? But I would have needed at least 10 more points or 20 more points just to stay in the trade. So I note that down. Strategy works, but you need a wide stop loss in order for this strategy to actually, have a chance to play out. Now you do that over 20, 30, 40, 50, 100 fucking trades. Everyone says, well, I did it, Roy. I did a couple trades and it's starting to click. No, the fuck it hasn't, you lazy bastard. 3 fucking examples. Bro, it's clicking. Dude, you're going to be frustrated for the rest of your life doing dumb shit like this and acting like this. Now you ask yourself, Roy, well, how many trades did you watch to get a perfect understanding of NASDAQ? Hundreds and hundreds. I watched probably 1,000 1-minute candles in my life, just on the 1-minute chart, watching candle by candle for years. Derek Vandelander, he said it in our recent podcast. No, it's not even recent. It's like a year ago. He did the same thing. All of the best traders did it, so you don't have to. Why do I have a course? It's because I spent the thousands of hours on the charts and I'm like, well, that was a waste of fucking time. But here's the 5 things that I did get out of that were worthwhile. And those 5 things you can save yourself months with. So learn a strategy, do whatever it takes to practice it. And then once you have the capital, while you're learning a strategy, go get money, right? If you're in the States or you're somewhere fortunate, make sure that you're using all the resources around you. There's jobs everywhere, Craigslist, fucking Uber, all the shit. Don't be a lazy motherfucker. Like, you have to go get money. Oh, bro, in 3 months, magically, when my money comes up, I'm going to go get a funded account. Yeah, kiss that shit goodbye, motherfucker. Bills are only going to pile up. Debts only get worse. So unless you fucking saddle up and learn how to sacrifice in the short term to win in the long term, then kiss your dreams goodbye. But if you're telling yourself, Roy, that is me. I am willing to sacrifice the short term for the long term. What you can do is get a second job, get a part-time job that's from home that you can do so you can learn and study trading while working from home. That's your second job. You can do one of those, work for yourself. So Uber or GoPuff or any of these things. You can go on Craigslist and find odd jobs. You can ask for more shifts at your job. You can work overtime and rack up the overtime pay. If you live in a fortunate society, these are options for you. Now, if you live in an unfortunate society, we can have a conversation as well. Robbie says, my mom and dad passed away. I'm very sorry for your loss, Robbie. And my deepest condolences to you. Wishing you nothing but strength, my friend. And I have 5 sisters and I want to look after them. Well, take the word want out of that. He said, my mom and dad passed away and I have 5 sisters and want to look after them. Say, I will look after them. Because you don't have a fucking choice at this point. You're the man of the house. Do you have a video of strategy, bro? I will follow it. Yes, Robbie, look at our channel. I have so much free content on the channel that you will never have to pay a single dollar with me, and you can learn everything you need to know. For those of you guys that are fortunate enough to have a few dollars in your bank account and you want to skip you sort of want to save yourself the time, what you're paying for is efficiency and organization with these programs that we have. So Robbie, don't feel like because you can't pay for the program, you're not getting the same info. You're probably getting better information being on this stream than you can get on any of the other, like the specific program videos, because I'll put my whole heart out here. This is all the information, nothing held back. Got you? Robbie, stay in touch with us. Let me know how things go for you, but I guarantee that you will be successful. You will look after them, and trading may not be the immediate vehicle for you because you do need money to make it. But I've never met a person that is a master at their craft, that is an absolute, dedicated to their skill, that has learned one thing and mastered it completely, one of the best in the world at it, that has not gotten incredibly wealthy and successful. And so if you're broke, if you're living in a place that has zero opportunity, what I need from you is to become the best trader you can, demo, learn the strategy, back test, everything you can to be the best of the best, and money will find you. Hedge fund managers will throw money at somebody if you have a track record that can be proven. So that should be the goal for a lot of you that are down bad on your luck. The rest of you, sack the fuck up. All right? You just saw the situation that this individual is dealing with. Ask yourself how bad your problems are. Your coffee was late this morning. You don't want to fucking get on the charts and backtest. Let's be real here. Not everybody will make it in trading, and that's perfectly fine. But the more the merrier for us, right? All right, everybody. Surprised you guys stuck around for the stream so long. Good to have those of you with us. See you tomorrow morning. Bright and early, 9:30 a.m. Eastern time. I'll be going through market news, geopolitical updates, as well as live trading my strategy. So you can, if you guys like me, you can come and make money with me. If you don't like me, at least you can come and shit on my strategy in person while I do it live in front of you. All right? You can't fake that. You can't pretend that. You can't post screenshots and manipulate stuff. It either works or it doesn't. And there's only one way to find out. Tomorrow morning, 9:30 a.m. Eastern time. Catch you there. Take it easy. Peace. All right. CA members that are left on here.